Hello, welcome. This is Business Week coming to you from our studios here in Lagos, the nation's commercial capital. I am Frank Omalape. Here's what coming up in the moment. The Central Bank of Nigeria raised its benchmark interest rate, known as the monetary policy rate, to 22.75% for the first time in 8 months. Plus, the CBN begins sales of foreign exchange worth $20,000 to eligible bureau de change operators across the country to improve liquidity in the FX market. And finally, outside Nigeria, Japanese industrial output fell by 7.5% in January compared to the previous month over concerns about the economy sliding into recession late last year. Well, these and many more are what to expect on the show today. I am Frank Omalape. This is Business Week. And thank you everyone for joining us. Let's begin with the major stories that made headlines in the week. The Central Bank of Nigeria has raised its benchmark interest rate, known as the monetary policy rate, to 22.75% for the first time in about 8 months. The cash reserve requirement was also increased to 45%. Correspondent Ademola Lawrence report now.
According to CBN data, this is the highest MPC rate ever and is aimed at mopping up excess naira liquidity. Olayemi Cardoso, governor of the CBN, will chair the Monetary Policy Committee meeting for the first time since he assumed office in September 2023. The governor of the central bank talked about a clampdown on crypto exchange, including Binance. He said over $26 billion has passed through Binance Nigeria in the last 4 years.
In the case of Binance, in the last 1 year alone, $26 billion has passed through Binance Nigeria from sources and users who we cannot adequately identify.
The governor says the CBN will ensure that the economy is highly liquid and money will only get to genuine players in the economy.
The committee decided to further tighten monetary policy as follows. 1, raise the MPR by 400 basis points to 22.75 from 18.75%. As the central bank is concerned, we are moving to a very aggressive regulatory environment. We are moving to a very aggressive regulatory environment where those policies have been coming out, as you can see, and tolerance for people not to abide by the regulations that are coming out and to comply is zero. People will have to abide by those regulations, and those that do not will face the consequences for not doing so.
Mr. Cardoso also revealed that $400 million was paid to settle some outstanding foreign exchange commitments.
About $400 million that have to those that have been so identified. And we are committed to continue to do so in one form or the other to those that are genuinely identified and proven cases.
Mr. Cardoso says for the CBN, collaborating with the EFCC is very important, and they are also determined to do everything in their power to stop manipulation in the market.
Meanwhile, in the week, the central bank announced the selling of foreign exchange worth $20,000 to eligible bureau de change operators across the country. This was disclosed in a circular issued and signed by the Director of Trade and Exchange Department, Mr. Hassan Mahmood, in the week. And according to the circular, the move is aimed at rectifying the persisting distortions in the retail segment of Nigeria's foreign exchange market and bridging the widening gap. The allocation will be sold at a rate of 1,301 naira to the US dollars, reflecting the lower band rate of executed spot transactions at the Nigerian autonomous foreign exchange market. This has come in 2 years after the suspension of the sales of foreign exchange to the bureau de change operators. And away from there now, trade ministers from the World Trade Organization member nations convened in Abu Dhabi for the 13th Ministerial Conference with a shared aspiration to forge a path towards revitalizing confidence in the global commercial framework. The Director General of the WTO, Mrs. Ngozi Okojo-Iweala, lauded the remarkable adaptability of the multilateral trading system, asserting that it has demonstrated resilience in the face of formidable global obstacles. The four-day event have in attendance ministers of economy, trade and development from various countries, as well as representatives from global economic and trade organizations attending the event.
It would be dangerously naive to take trade's continued resilience for granted. The global economic slowdown and wider uncertainty are already having an impact. Global merchandise trade volume growth in 2023 appears to have fallen short of the 0.8% we were projecting in October. And given all the downside risks, we may likely undershoot the 3.3% merchandise trade growth rate I just referred to for this year. This for food, energy, fertilizer, and other essentials continue to weigh on people's purchasing power, fueling political frustration. Shipping disruptions in vital waterways like the Red Sea and the Panama Canal are a new source of delays and inflationary pressure, offering a real-time reminder of the risks posed to global trade and output by security problems and the climate crisis.
And outside Nigeria now, German sport apparel company Puma plans to return up to 50% of its net income to shareholders. The company, in a statement, said it will now return between 25 to 40% of the group's net income in dividends, up from 25 to 35%. The first tranche of a share buyback program will begin in March 2024 and end May 6, 2025, with Puma expecting to buy back and then cancel 100 million euros worth of shares. Puma warned of challenging market conditions in result, with sportswear companies having to convince cash-strapped consumers to buy trainers and tracksuits. The firm's shares have lagged pairs Adidas and Nike in the past 14 months, way down by weaker sales than its competitors. And latest data from the Japanese Ministry of Economy, Trade and Industry shows that January factory output fell at the fastest pace as the production downturn in motor vehicles adds to concerns of an economy that slipped into recession last year. Industrial output fell by 7.5% in January compared to the previous month. The ministry also downgraded its assessment of industrial output for the first time since July last year as it tries to recover from recession of last year. Analyst at Cato Economics, Mr. Gabriel Ng, says that the plunge in January's industrial production suggests that GDP will fall yet again this quarter, which will add to the view that Japan's economy is in recession. Well, those were the stories that made headlines in the week. You're still watching Business Week, coming to you from our studios. And after this break, our focus will shift and we will look at the CBN new lending rate and the impact on the manufacturing sector. Well, that's our talking point in a moment. Please stay with us. Well, thank you everyone for joining us. Let's get into our conversation for this week. The MPR set by the Central Bank of Nigeria serves as a benchmark interest rate that influences borrowing costs for businesses, including manufacturers. What are the prospects for Nigeria's manufacturing sector in 2024 in light of the new lending rate set by the CBN and foreign exchange rate amid the current macroeconomic challenges? Well, that's, of course, what we'll be looking at on the show today. And to discuss this, I'm joined by the CEO of Friska Farms, Mr. Usman Ima. He joins me virtually now. Thank you, Mr. Ima, for your time. Let's start with your assessment of the manufacturing sector performance given the macroeconomic environment, including the exchange rate volatility. And of course, there is also high inflation as well. How is the sector adapting to the changing business environment?
There has never been a time in our history, to the best of my knowledge, that we've had our currency compared to FX being so unstable. And we haven't seen this level of uncertainty, and we haven't seen this form of devaluation. And these have their, they have very huge implications on the economy and manufacturing, which is the real sector. So on the one hand, if you're paying attention, close attention to the ongoings in the manufacturing sector, you would have read that one or two multinationals have either lost, they've made losses that have wiped their shareholders' funds. You'd have heard of the ones that have decided to stop their operations in Nigeria and move out and convert to a trading company. And then you'd have heard of manufacturing companies that have shut down totally. I know of companies that have either shut down or put a pause on some product lines. Unfortunately, this floating of the naira and this uncertainty is coming at a time where we have inflation in food. We have food scarcity or increase in prices of food. So which also translates to increase in prices of commodities and raw materials that a lot of these factories manufacturers work with. So it's like a double hit, right? You are being impacted by the uncertainty of the currency, and then you are being also impacted by increase in raw material prices. So we're hit from both sides, right? And as much as I would like to be very optimistic, the impact has been most of the stories that we've heard have been negative, right? But then there's another flip side to the story. So because of the volatility and the uncertainty of this currency regime, it has made it difficult for business people that import products from other countries to bring in products. So the few manufacturers that are able to manufacture and have established some form of brand, they're having less competition because people are not able to import competing products, right? And even when they are able to import competing products, the hike in FX, in the devaluation of the naira has made their products so expensive that the Nigerian products that can manage to stay in business and produce their brands that are relatively known are able to compete. So there are two sides. While people are shutting down, people are stopping operations because of the difficulty. I mean, the inflation hits from local raw materials, hits in terms of energy costs, distribution costs, and the likes. There's also the side where foreign products, it's difficult to bring in foreign products because access to foreign exchange and even repatriating that same foreign exchange after you've sold has become a challenge. So in all, I would say that it would have been floating the currency and even removal of subsidy would have been a very, very positive story if we didn't have this food inflation and if we had sorted out infrastructure and created enabling environment for a lot of Nigerians to produce locally.
When I want us to look at the implication of these on the manufacturing sector, of course, 22.75%, that's the rate, and how stakeholders like you in the manufacturing sector perceive the current monetary policy framework in Nigeria and its influence on the cost of borrowing. How does this rate affect manufacturers in terms of operating costs and product prices?
Okay, so I'm going to just pick on two. So interest rates, one, increased from about 18% to 22.5%. That on its own has, and I'm trying to be very careful because again, when it's always good to have a holistic view of things as opposed to the interest of the greater good. Now, having an understanding of the recent policies makes you see that in the long run, what the policy intends to achieve is to, one, mop up excess cash in the system, which is part of the reasons why we have FX volatility. In the past, governments printed a lot of, which is why one of the reasons why we have inflation. When there's inflation, you try to mop up excess cash in the system so that there's less cash in the system, right? So that's for the greater good, because eventually, ideally, it should have a positive impact on the intervention that the CBN is doing to stabilize our currency. But if I look at it from just a manufacturer's perspective, it's a tough pill to swallow, because what it means is that, I mean, you can't manufacture without debt. What it means is that, your bank is writing you to say that, look, interest rates have been reviewed, so that loan that you took at this price is you are no longer going to be paying this. Your rates have increased, which doesn't really favor any manufacturer. But in the long run, if the goal of the policy is achieved, we will be better off for it, because we will have the inflation. It will stem inflation, and at the end of the day, it will help with stabilization of our currency. So we've seen analysts that have come to say that, people are going to lose their jobs, people are going to lose jobs. This is going to cause more hardship. Cost of funds has increased. So if you are looking to raise funds to do something, it's going to be more expensive. This is coming at a time where consumer size of wallet has reduced. So even if you are producing, less people are buying, and cost of production has increased, you can't increase your margin. So it's looking like you can't even do business, because if you are borrowing at 30%, right, and cost of power and cost of infrastructure and raw materials have reduced your margins, right, and this hasn't changed, and then now to access funds, you're having to access funds at more than 30%. So it just looks like, manufacturers are being squeezed closer and closer into a box.
Well, I understand Nigeria's manufacturing sector faces a lot of challenges, obstacles beyond the MPR. What are the most critical challenges currently hindering the sector's growth, and how can this be addressed for sustainable development?
First challenge that most manufacturers face is infrastructure. So road infrastructure, power infrastructure. It takes a huge chunk of your cost. Then raw materials, for manufacturers that source their raw materials locally, I think that raw materials is also a very, very huge problem in terms of challenges right now. The other thing is, especially for those of us that operate SME manufacturers that operate in Lagos, government agencies, multiple agencies that come for one thing or the other, making it difficult for you to even breathe as a manufacturer. That's another challenge, right? Purchasing power of the consumers, that's another challenge that manufacturers are facing. So people are not able to even buy what you are manufacturing. I saw in the news this morning, that the price of sachet water, pure water, is going to rise to 100 naira. And this has taken us back to when people used to put water in nylon and tie. You don't know the source of the water, it's not regulatable, it's 10 naira. And that's what people are moving towards now. So, and this is because, people can't afford to buy pure water for 100 naira, right? So these are the challenges. I don't know if you've asked what I think can be done, or you're just asking for the challenges. There are many other challenges out there. I don't want to go to the popular one, which is funding, because everybody talks about funding. And funding it goes without saying. I don't want to dwell on it. But aside funding, these are the other challenges that manufacturers are facing. The cost of fund locally is huge. You can't even touch foreign funding, international funding, because the exchange rate and the uncertainty, the instability of the currency will not help you. You're not able to plan. You can't do business as it is now with foreign funds. You can't.
Okay.
You can't.
What innovative approaches or policies can be adopted to enhance the competitiveness of the sector amidst the changing MPR dynamics and business climate and environment? And in terms of long-term prospect for growth and development, what's your outlook?
In terms of innovative approaches, right, to make manufacturing in Nigeria more competitive, I know that this is not going to be a popular opinion, but the truth is that our currency cannot, we can't go back to 300 naira to the dollar and expect that we want to make manufacturing competitive in Nigeria. We can't go below 1,000 naira and expect that we want manufacturing to be competitive in Nigeria. And I'll tell you why. And let's even look at countries that have crawled out of situations like ours to become, either Asian tigers or developed countries or world powers. They typically don't have currencies that are par with the dollar. You can't have 200 million people in a country and then your currency makes it easy for people to just go on the internet and import whatever they want to import. Because you have more mouths to feed. Countries with population of 5 million, 6 million, they have that luxury. But you have over 200 million people. There's no strategy outside promoting manufacturing that will take you to the promised land. None. I've looked at all the instances. None. There must be a way to encourage, even if you're not going to export, ideally, you should feed yourself. The Korean currency, Korea that has Samsung, that has Kia, Hyundai, LG, and the likes. The Korean currency is about 1,300 to the dollar. It makes it competitive for them to manufacture. Now, and that's why I said it's not going to be a popular opinion.
Well, I'm going to let you go in a moment. But just before I let you go, speak to opportunities in the food subsector where you play. Beyond the current state of the sector, what are the silver linings or new areas of technological advancement that Nigeria needs to explore for growth?
Beyond the challenges, like when I said in the first answer, I did, the fact that the economy, inflation is rising high. There's uncertainty. There's a lot of uncertainty. Even foreign exchange, there's instability, and all. The truth is, like I said, there's always two sides to the coin, and there's opportunity in the food subsector, right? Because what it is now is that foreign imports are difficult to come in and they're more expensive. So local alternatives that have built a bit of recognition and brand are having a field day, right? Now, there's also the fact that raw materials are expensive because we're coming from 2 cycles of bad harvests and then a lot of hoarding. But there's opportunity there for people that want to come in, right? For people that want to come in to go into primary production. There are new technologies now. People are doing hydroponics. People are doing greenhouses, and people are bringing in, new ways of farming that can maximize our outputs. And Nigeria is blessed with a lot of land. So and we have the population, we have the mouths to feed. Even when it comes to exports, especially of food, this is actually the best time because first off, because of the value of the currency now, when you export, you get more naira. It's more, you make more from what you export now. And these are exciting times to live in. There are more than 10 million Nigerians millions. I don't want to put a number because I don't have data for it. But I know that they probably have about 10 million Nigerians in diaspora that are looking for Nigerian food. And even our culture, because of the success of our music, our food is also being appreciated. So even exporting of local foods to foreign countries is also an opportunity. Just like I said earlier, beyond the challenges that we are facing right now, I strongly believe, and I'm living it, there's a lot of opportunity. You just need to have the right knowledge and know how to to set up your business and structure it for success. But there's a huge opportunity right now in food. There's never been a time when the opportunity will be, because people must eat, right? People must eat, and it's getting increasingly difficult for foreign competitions to come into the country and compete with local players. And our local food is gradually, increasingly being appreciated globally.
I think a good place to leave it. Thank you so much for your time. The CEO, Friska Farms, Mr. Usman Ima. Thank you for coming on Business Week. I'll see you again.
You're welcome. Thank you.
And that's our show this week. Thank you for watching. We'll be back again next week. I'm Franco Malape. I'll see you again.